All right, ladies and gentlemen, I got your watch list coming into June 26, 2019, and I hope you are excited as I am, and I hope you're paying attention. I'm so stoked because we found an issue with the crystal ball. Not only was I so wrong yesterday, but I was so right, and I want you to pay attention because I think I found another one, but this was that Biogen we put on the watch list yesterday. A lot of you ask how to find these big gainers, what they do, and even though this was a weekly, this was playing it early in the week. It's not like we had to force this to a Friday to get 1,000% gainer. It was about 800%, $200, or excuse me, $20, all the way up to like 140. And of course, I didn't sell out yet and take my profits, but a lot of you did. And we're going to talk about that. But I have another play in mind that we need to be watching. But before we get into the craziness that has created these crazy plays, we have to understand what caused it. Today was a wild day. Jerome Powell came on, and pretty much it was Bullard, and then right after it was Bullard at first, and then Powell came on, and then all hell it broke loose after there because he said something very, very specific. It sounded a lot like the stuff we've been going over or that we heard from him over the Fed meeting last week. But overall, it was a huge, and him and Bullard, it changed something really big. And I guess I'm going to give you guys the answer for this, but pretty much if there is a trade deal worked out at G20, that could make the market go down now. So I know it sounds very counterintuitive, but that is pretty much what happened here today, because today was mostly Powell pretty much clarified everything exactly how he said it, but by being so straight on and about it, there was also an element of him kind of clarifying that he's not as dovish and going to cut rates as people think, but he was so on point and it was so implied. It kind of reminds me of the reversal he did here in December when he pivoted from hawkish to dovish. It's kind of looking that he went from dovish to hawkish now, and people are confused, but that's not the issue. The real point of the matter is now he was saying they're ready to cut rates, but it's based on what happened. So now if a trade deal or trade talks get restarted, or there is a trade deal in place, that would eliminate any of those external factors that he's saying is the logic for them to cut rates. So if they either restart the trade talks or they make a deal, there's no basis for cutting rates anymore. And you've seen, although it has a negative long-term effect to cut, you can kind of see the markets and investors are kind of like crackheads. Even Trump, they want that rate cut to spur growth. People want it, or they at least don't want this high rate environment. But Powell kind of threw it on the table that, hey, if none of that, it's not that this is an autopilot rate cut, and I think the market reacted to it and saw it, but now it's going to put us in a weird confusion, but I almost forgot. The most important thing you need to do right now is post your watch list below. What plays are you watching? Doesn't matter, long-term, short-term, just give us context to it and like the video. We have 700-800 videos on the channel. If you guys ever have questions on certain stuff, start liking the video and let YouTube's conspiracy start to recommend you all of our content. But it supports the channel. I appreciate it, and I need to see you guys engaging. But if you don't do that, at least, very least, post your watch list. We got to source that info. Coming into the keys for tomorrow, this is going to relate from the keys for the last 2 days. This is that food poisoning I was talking about, where the market, it's going to take something in and it's going to think it's something. And we took the rates. We pretty much took everything Powell said at face value. Everyone's like, okay, yep, rate hike. We swallowed that pill. Even Trump, had the audacity to talk some shit. But now that didn't really. Today you had Powell reversing it. Powell was talking smack on Trump, and now he's kind of reversed the tone a little bit, but still keeping the same tone. And I said this right away. I said he's pushing the ball back into Trump's court, but this is now one of those events, as we saw it started to sell off and how it treated the key support levels, and these are the levels that we need to be watching for. Again, so watch even tomorrow a break of this 290, and if it slips past 288, like it did slip past the support levels today, that's not going to be a good sign. But he put the ball back into Trump's court now, and this is that event that could literally, what I was saying, food poisoning or anything where we could have it where the markets could force the hand now coming into this. So now it's kind of back into Trump's hands. If Trump really wants a rate cut and wants a accommodative economic environment, he has to botch the trade deal. If he goes for the trade deal, we're going to have the rate environment. So again, this is what I want you guys to realize. Although the markets are reacting to trade, markets are also reacting to Fed policy. So now the point is, we thought this whole time they were in agreement, but that's not the case. So what I'm trying to say here, I think if one thing or the other happens, it doesn't really matter what happens or what you expect. There will be some period where the market is going to, the market's going to have to digest this. Again, doesn't mean up or down. I don't know. And again, I said that 2 days ago. And now yesterday, this is what I was saying. My crystal ball broke. Took like 2 months in a row or something, 3 months in a row. We were on point with a lot of these, but it just seemed like it didn't really hit today. But, I do have my little insurance plan and my caveat to say that we could see a gap. And, some people were even, saying I was really accurate. Like, no, that was a gap down. But it wasn't, even though that was small, this wasn't what I was expecting. And the fact that it made most of the move intraday is very important. And this is what I'm saying about coming into either tomorrow or after the meeting, whenever things decide, but especially just this week, if we break below those support levels, this is going to be key. So watch out for all that. We are going to see, though, I want to see how this plays out. But again, we're still going to be watching the dollar and all that. But as far as the keys for tomorrow, it's the same thing that led in from yesterday. The market and bonds are going to show us how market really feels about Powell and everything else. The trade deal can now hurt the market instead of help it because everybody has priced in the hikes so aggressively. So again, watch both the stock market to move, but then also the bonds, because if they start repricing, that would be the most ideal situation to negate some of the volatility or minimize a downside effect or any, pretty much behavior that's going to be great volatility but difficult to trade is if the bonds start to kind of pull back. And again, we've been watching TLT. I'll throw that up there, but it's important to watch that interaction. But again, if the removal of these external cuts, it wouldn't give us a reason to get a rate cut. So despite we could see the predictions on investing.com and what the bond market is saying, we really just have to pay attention to the logical reasons. And that's why, Powell kept reiterating it. And he was very, very clear, which made it, I think, so confusing today, because today he was so clear about it. It was confusing, if that makes sense. It's kind of like, why was he saying all that so directly? But the key tomorrow is going to be, again, rates and bonds. And we saw movements with them today. You could see what happened where the 2-year, the 2-year staying the same in the 10-year. Now look at, this is the pre-market, but essentially what we're going to look for now is the 10-year to drop while the 2-year gets higher. And the 2 and the 5-year inverted briefly, and that's one level of yield curve inversion. But again, this is what I'm waiting for the markets and algos and everybody to react, is when you do see the 2-year invert with the 10. That is the official yield curve inversion a lot of people stand by. So watch that. Those are going to be the keys, but also the small caps in the banks and transports tentatively. But the leaders today were the small caps in the banks. Small caps were up at first, only to come down. They were the least lagging next to the NASDAQ. But then at the same time, same thing with the banks. And, again, the small caps led the way. They weren't as weak. And then the banks, they led the way in terms of weakness. And then they bounced up. They were all over the place. But again, we've said this, and the fact that the banks and the bonds are moving in the midst of all this, and again, with what Trump is saying, Powell, this is pointing kind of towards, it's giving me evidence to this thesis that I've just brought forward with you guys, with the market kind of reacting regardless, because now it's literally tug of war between what has more meaning, the Fed policy or the trade war. Both are political. This is great. And again, I think this comes down to, if I said this yesterday, I want to have multiple theories with everything. So despite being wrong on the gap, the fact I was able to take advantage of other stuff and a lot of the other things we're seeing, there was some stuff working, some stuff wasn't. But the key is some stuff is looking familiar and some stuff is unfamiliar. And I'm getting excited that the unfamiliar is happening, because that means this is something I've never seen. Because again, if it's familiar, yeah, sure, we could have an idea of what's going to go on, but the fact that things start to move unfamiliarly, and even the markets and a lot of the other participants get confused at the same time, I think it's giving us some really, really solid information. But with that wrapped up, let us get into the plays now. Let us start with the earnings. You had FedEx, and I already threw up the banks, but we had Micron. These were both after hours. I thought FedEx was going to go down. The earnings was all over the place pretty much. They missed in a really, really weird way, because they beat the guidance they had, but that was the second guidance that was lowered. So there was that. They're even estimating their capex. FedEx even sued the government today over the trade policy, all that. But again, watch them, because if we are, I'm still thinking we're in line for a gap if it is going to take one more day. But these are the plays that are going to affect the market. These are what's going to bring their industry up. Literally, Micron is up 6%. That is going to bring up the chip makers. Transports, these were down 2%, and we saw the effect the market had. But I still like these plays. I'm going to watch out for them. But the key that's going to be with it is sympathies. Now, watch out for UPS and watch out how it could affect any other gap. But those are going to be important. Next up is Caterpillar. Now, this is one you want to watch because, again, look at it. It just stayed the same. And there is other companies that look like this that are important. But the fact is, it didn't move as much. It's still a Dow component. It still moved 0.5%, but big moves, and it's holding there. These are what I'm going to say when we get to the option chain, because when it's holding, even though the stock's not moving, you're like, why would you be interested in this? When it does start to move, you're able to take advantage of time decaying. And again, at any time, really, Caterpillar's done this, it's usually works in your favor. So I have a play already on August. I was waiting. I think we might be averaging, I'm barely down on them. So I think I'm just going to be going in on them more. But my issue with all of this, I don't want to get, again, if things start to look how I haven't seen before and it's the unexpected, like I said, I'd rather be late than wrong. So I don't want to scale in and add and just be wrong. And you could really, really get burned, especially at these awkward points with where the VIX is at and what that means for the pricing in the contract. But watch Caterpillar. I'm going to like that one a lot. Johnson & Johnson is going to be a good one, but really I want to skip to the main ones here, Amazon, Apple, and Google, because Apple is really a lot like Caterpillar, but the fact is it started to move with the market, and some of you guys were asking yesterday that you said, does Apple have a high or low beta? I said it was a high beta, but I guess I was comparing it in reference to some of the lower beta stocks you want to go for the dividends, but the key is it's going to move like the market. I think the beta is around like 1.2, meaning it moves typically about 20% more volatile than the market. Lately, I would say they're almost on par. Again, you could pull up any technical to go figure out what it is, and again, it's going to change with the time, but this is what you could really see. It's moving with the market, and that's why I said we might be able to set up plays. I wanted to get another one, but the fact Apple started to slip, that's an important one to watch, and that's why I'm also saying at the same time, wait for Caterpillar, but we are even seeing big divergences, and this is stuff I don't want you guys to miss, or maybe I'll just throw it on here. But this is what I was even relating with the SPY and even FedEx, but this is the transportation index, and again, this is usually leading. So either transports are going to bounce with what happened with FedEx, but if FedEx brings this down, watch out. These could converge, and again, the longer we see the divergence, the worse it's going to be, but we're going to see what happens. And even when you do look at the daily for the SPY, that's a big candle. It looks like, I don't know where that came from. It didn't look that big or feel like that, but when you look at it on there, it looks like one of the bigger days. It starts to get a little panicky, but again, notice the volume, and this is what I was saying, and this is the headline risk I've been just saying be careful of. You're going low volume the days before, it could make these moves. Literally, look at the days prior, low volume, then boom, volume comes in and it shoots up the market. And it's not like this is high volume. It's literally just slightly above average volume off of very, very low volume, and you see the effect that it's having. So this is that headline risk you got to watch out for. But watch those plays. Watch IYT. I like it. But again, Amazon now, Apple, and watch how they move with the market. But Amazon was really, really weak today. It moved a lot slower. Again, I had that rollover play. Thankfully, I think that's going to do a lot better than watch Google and Facebook. But again, now, if they start to give up and they start to really sell off with the market in the weakness, these are going to be some good ones to play. And again, with some of the spreads, you could get a lot of those plays for cheap, but also too on the bounce side. So again, do not forget these, like Facebook and Google as well too. When they sell off a lot, those are some of the stocks that the market could keep going. They might find their sweet spot for where they stop declining and they could bounce. So just keep your eye out on both sides and don't get too fixated on one way or the other. Watch those. Next one, we got Micron, and again, this could boost up the industry, and I think that's going to be a good one to watch, but that's not the important key. The important key from it, watching the NVIDIA or XLNX. I like those and see the sympathies and how they play out, because NVIDIA was just a beast today. I think AMD didn't do too well, but again, what this is going to do for the chip makers is going to be very important, so watch them. The next one I want to watch, even in relation to the other ETFs we've talked about, like TLT, Nugget, I want to go after gold, but if you guys, again, if you were watching this watch list and paying attention, I was saying this is how I want to set up these plays, and be careful. If you guys have heard why I don't like paper gold, I've talked about this a lot, but I said this the other day, we're pretty much watch for this, and this is going to be our entry, and it could help set us up. You're going to wait till gold rips, and gold did very, very good today. And again, I guess futures are dropping right now. We're down a little bit, but you could see the gold futures right now, they're still up, even from today. You could see, 1, 2, 3, I guess, did they end up closing a little red, but I think they ended up closing red, but at most of the day, they're at 14.42. Gold was killing it, and you would think that Nugget would do good, or even GLD. GLD did a lot better. It looks more like the gold futures because it's not a miner, but at the end of the day, how these ETFs work and how they're designed, you really got killed, even though it had a really monster day. So you got to be careful for that, but now that means we could start hunting it if we didn't play it. So keep your eyes out for that. Watch out for the banks. We've already talked about the Wells Fargo, and I want to set up which ones are kind of the laggers and leaders, but then lastly, this one, it keeps getting my attention. Booking. This is Priceline, if you guys aren't familiar, but really what I like about them is their overseas profits, and now dollar and rates are an issue. Things are getting a little wacky, but what I've noticed about this, there at one point there was a huge phenomenon with this stock. I used to hit it a lot. The issue is it's high spreads. It's expensive to play, so however you have to do that, it's going to be involving some spreads, and you're going to have to really finesse it, but I've been eyeing this. I really, really want it, but essentially, if there's a big dollar movement and the dollar goes down or up a lot, I'm going to start trying to hit booking because they could have a pretty either good inverse or tandem. So watch out for that. I like it a lot. And lastly, on this chart, before we get into our option plays, Zoom, I'm going to take you to an option I bought today on this that I really, really like. But again, how it's just been trading, it's getting below the supports. Now it's really, really selling off, kind of like a Beyond. So it's at an important level here. It's either going to have an epic bounce or it's going to do what every other IPO has done. It's going to have to kind of flush out and could set us in this awkward stage, and it could go from this Beyond Meat type stock to doesn't move at all. But speak of the devil, Beyond Meat, it kind of did something similar, but not as bad. It didn't drop below to that support. It's bouncing, and again, even Kern did the same thing. So I remember you guys, we're still holding this. Somebody said, they said, Josh, remember we reminded you not to sell it. I'm still swinging this trade. Remember, I sold out half. We pretty much made the shares free, so we're just holding. I still have the warrants. I'm a big fan of that one. And again, if people ask when are you gonna, would you average down? I would average down at like $15. So that doesn't mean I think it's gonna go to that price, but I'm not gonna average down unless I'm getting 50% off of my entry, and my entry was about $24 or $29. And I'm looking over here too. It looks like futures. That's the ES, the SPY, and I think the Dow futures are also dropping, but they look like they're selling here below that 290. So again, if that happens, that will probably be the gap in the morning. And again, even with the whole gapping thing, I'm jumping all over the place here, but that's because they're starting to move. But I think it would make a lot more sense to see the gap today. Again, I was expecting it today, but the fact that you could see it just gap, instead of dealing with this support level like it did today, it could probably just be the gap. But who knows? I don't see any news right now that's while I'm making this video explaining this. If there is, I'll add it to the end. But watch Beyond, and I'm going to get to this when I show you guys, but I like it. It's up today. I still have that November. I'm going to try to sell some calls on it tomorrow, but there also might be calls I might be looking to buy, and when I get to the options, there's some frogs available. So watch that. And then next, I showed you guys the Nuggets, but the same concept is going to apply for Yang. This is the inverse to some of the China stocks. I like this. It's a little harder to play. I already have a butterfly on it, so I'm limiting the risk. But again, when this has been, even if you don't want to play that, one plays I really like instead is YY. Again, we've got those plays last week in Baba, and you could see which Chinese stocks are doing good and bad, and laggers and leaders. And again, it's going to be the same exact issue to watch, but watch out for those. Watch healthcare and MRK. Again, we've been playing those and watching how they've been going up a lot. So if that strength holds up, and it's going to lead to when I get into the option plays here shortly, it's just what's going on with healthcare. I'd watch them. These are one of the ones I like. They are a slow mover, though. So if the volatility starts to slow down, that's when you want to take advantage of it. But keep your eyes on that. Like we said, TLT is just going to be like the nugget and everything. And again, related to what's going on and what Powell said and everything, you want to wait till this levels out. And depending on how the bond market prices stuff in response, that's where we're going to make our play. But, wait for these moments in capitulation. But, keep a longer view in mind of how you're going to profit off these and play them. So there is that. And now let us get into the option plays. So again, if you guys saw this yesterday, this is the one I put up. So hopefully you guys are paying attention on here. I know I made a lot of people money on this. So if you're finding a way to get salty, I just encourage you to stick around to about 10, 15 minutes in. Who knows? But the best part was you didn't even need to play this yesterday. This was a swing trade. You didn't need the day trades. We got it for $19.20. I mean, you could have bought it this morning. You could have even got some of the other ones. And again, it all depends on when you bought it and when you sold it too. A lot of people, if you paid too much, you could have overpaid, got screwed over. Yada, yada, yada. It wouldn't have been the best look for you anyways. So I like it. I'm just going to hold it. I'm doing something. I bought this on the small Robinhood account with like 80 or $100. So I want to see how that, I'm trying to let the smaller winners that are good work. But again, why did I hold it? I put 20 bucks in. I told you guys yesterday I wanted to spend less to get a better scale, so I didn't use a big amount of money, and that's why I bought it on Robinhood to save on the commissions. But the fact that it made the move and pretty much at one point came within $4 or $5 of the money, and it made a $6 move here today, and the fact it did bounce up after hours. But the fact it was a Monday, there's still a decent amount of time, so pretty much up, I think, based on these moves here, even if it stays up at these level, unless the stock completely dumps and turn around. And again, it's had many, many instances, if the market was to bring this stock down, it would have already done it. And you're kind of seeing that hasn't been the case. It's held up pretty stable. So that's why I like it in this climate. That's why I'm holding. And pretty much as long as the price holds up, I'll probably get break even or the same amount by Friday or even Thursday. And that's kind of my plan. If it doesn't make a big move tomorrow or Thursday, we'll probably sell out. And if it does make a big move tomorrow, I'm going to look to sell out, wait till it comes down and buy another one. But Biogen, it's a slow mover, and these slow movers, that's why the spreads are so big. People are like, why is the spread so large? It's a low float. One trade can move the stock $1. So think about it. The minute you get in the money, it could be a real big one. You guys have seen me turn 20 bucks into like 800 on some of these. And if you sell out too early, that 800 could have turned to 1600 or who knows what. So keep your guys' eyes out for that. But now the next play I want you guys to look at, well, remember all these, Disney and Qualcomm, those are going to be important, but I found a good frog for you, Beyond. So I like Zoom, and I'm going to show you guys the play I made on Zoom. But in looking at that, we've been putting these hand in hand together. The fact that Zoom is entering its own stage, and I think Beyond too. A lot of people don't feel the same way about it. It's kind of losing some of the hype, but still keeping it. There's the bearishness, but still bullishness. It's still doing it. This looks very, very healthy. The volume's still high. It's still a low float stock. I love it. This is why we got those long-term calls and are still holding them. So watch for the weeklies on these, and you could even go a little bit out. And I'm trying to maneuver both, and the Novembers actually dropped a lot. So if this is my experience telling you guys, I bought these ones. These are worth $1,100. We bought these at like $2,300. I've been selling premium on them in between. So these came down. They're a decent price, as you see, but time has gone by. But considering how much time is still left on the contract, that's an interesting, decay. It's not too bad. It doesn't mean, again, the fact that you're spending that much money, I don't like. The only reason why I spent that much money was to sell the premium. But now let me show you the frog. If you want to go in between on the weeklies and be smart, this one you just have to wait, because there was frogs today, and it made that epic move. And you could see here were some of the frogs. You got to go a little bit further out of the money. There it is. You see the frog forming. And if you guys don't know, you could just search on the channel, the Trading Fraternity Frog. We have a strategy. It's finding these 1,000% and big gain options, but it's pretty much allowing you to buy a call when you're late. And this is what I mean. You could have literally imagined this. Beyond was already up, but the option, you didn't have to buy it in the morning. The option came down even though the stock was up. But then at one point, the stock is literally just going up. And you see it moves a little bit sooner. Again, it's not a Friday frog. That's the difference. But the frog still exists. But essentially, like even here, you'll get some period of the stock moving up and the option will be lagging there. But it looks like a little frog. But watch these. So watch both the 180s. These lagged, I think, the most, or even the 172s. But the whole point is, these were very, very cheap today. So these were 40 cents. The 177s were about 30 cents. Yeah, around 20 bucks, that sweet spot. But pretty much wait, because these are frogged right now. But wait till the morning. If there's any volatility, if these fall out the money, they're going to capitulate and drop first. And then even though if the stock picks back up, then they'll come back up. But these are vulnerable, and that's what I'm saying. It's a mix of frog and push to the wall. But find the frog that doesn't believe he's the prince yet in the morning. And he's like, oh, wait, that is me. He'll drop, and then he'll come back up. But again, you need the underlying stock to move. So that's what we have to watch out for. And we have to make sure there is movement throughout the whole day tomorrow. So there's that. And then now the final plays, I believe I told you guys, Disney and Qualcomm. That didn't show up. But Disney, it went up today, and it's been having these days where it's just been pushing and pulling randomly throughout. But the fact that it's still holding up and it's around these level, earnings is going to come up right around the corner. They just hired the head of Netflix original content. So again, you could even watch a sympathy and reaction tomorrow morning and see even if Netflix is bad. But the volume's going up. The stock price is staying up. I like it. It's reminding me of Qualcomm. So keep your eyes out for this. There has been a lot of decay on some of these contracts. Again, when they do run up, when the stock runs up, it comes up. But as you see, day after day now, these 2 days are kind of showing, okay, it's trying to level out, but they're holding an equilibrium, so they're still kind of expensive. It's kind of like playing a McDonald's, but I like where they're at. I like the underlying, so this is what I'm trying to tell you guys. It's finding the underlying. We could try to find frogs and push it to the wall if it does start going crazy on the weekend, but I like the underlying, and keep an eye on the underlying to stock the option chain and get the best one. And then the same thing applies with Qualcomm, but the Qualcomm options are still holding. But I think this thing, it's just been holding up. It's slightly edging up. It reminds me of Biogen. It shouldn't be doing this comparatively to some of the chip makers, so watch what it does, but it's the same logic. So I'm bringing this up for you guys so you could bring me the options. I'm actually even holding the Julys. I believe I have these like 82 or it's 81 still, and they're pretty much just holding their value. Or it's these 8250s, I think. They've just been holding their value over the weeks. That's a 14-day chart, and these have not decayed at all. So think about that. That's telling you something. This is why I'm saying pay attention to it, but I'm most likely probably going to set some plays on Disney and Qualcomm tomorrow and add to some of the other stuff. I think I wanted Caterpillar as well, too. So I'm going to leave it there, you guys. Make sure you post your watch list. Make sure I see you there in the morning, 30 minutes before open, and let's go.